Hi, I'm Saday Sinha from Kotak Securities. I track banking sector as well as the NBFC space. I'm here to talk about the banking stocks with medium to long term horizon. To start with, there are many concerns in the market, be it asset quality concern or stress on the margins or even the slower business growth for the banking stocks. What we believe that although there are concerns on the asset quality, in fact gross NPA has increased by almost 40% if you see the stocks listed at stock exchanges. Now it has crossed almost 1.25 trillion for in terms of gross NPA. What we believe that many banks will report restructuring because every day we hear in the media that companies are being referred to CDRs. So that obviously going forward in next at least 2 quarters we will see increase in the restructured book. That will be overhang on the banking stocks. But going forward, the private sector space, they will do better because they have more focus on the retail book and their asset quality has already bottomed out. Going forward, there will be less credit cost and that will less impact their profitability. Coming back to the margins, we expect there would be 10 to 15 basis point impact on the margins for the banks under our coverage space. And this will be higher for PSU banks and lesser for private sector banks, because we have seen that private sector banks, they have maintained their CASA in last so many quarters, even though the system or the industry has seen a contraction in the CASA deposits. So PSU banks will be impacted more. On the business growth front, we are expecting 16 to 17% credit growth, and 16 to 17% credit growth is not bad if you look at such a broad base. So if you ask me which stock I should buy, my answer would be we prefer private sector banks, especially HDFC Bank and ICICI Bank, where we are more comfortable on the asset quality. Also on the liability franchise is stronger, and also we believe going forward they will report a healthy earnings. Coming back to the PSU space, our topic is SBI and second would be Bank of Baroda. SBI we like because after 2-3 quarters of bad numbers, especially in second and third quarter when they reported almost more than 8,000 crores of slippage, fourth quarter saw around 4,400 crores of slippage, gross slippage I mean, and the recovery and upgradation was higher than the gross slippage, and that led to a sequential decline in gross NPA. So going forward, what we believe, their asset quality is likely to improve, and or maybe that will remain stable, so that will be positive for this stock. Margins, obviously they have been reporting one of the best NIMs in the banking space, because they have again 47-48% of CASA, which is again one of the highest in the industry. So going forward, what we believe, there was a concern on the asset quality which has, at least for a time being, it has taken a back seat, and going forward this stock is likely to do well. So in NBFC space, what we believe in the NBFC space, our top picks are IDFC and LIC Housing Finance, and we believe in falling interest rate regime, always in initial stage or maybe in the first initial stage of decline in interest rate. In NBFC space, we like IDFC and M&M Finance. IDFC because it's the best infrastructure financing company, and M&M Finance is more focused to rural India, and they are a niche play in that segment. So we will prefer IDFC and M&M Finance in NBFC. That's it from my side. Thank you.